So last year it was tough. A lot of people would acknowledge that. My question to you is this. Take me forward. I'm talking to oil CEOs, mining CEOs. They're telling me a better story. They're telling me a stronger story. And growth looks a little bit better. Take me forward. Are you optimistic about 2017 versus where you were in 2016?
Yes, we are. I would say there are plenty of elements which are more positive. First, if we look at 2016, we are back to growth, and this has been accelerating in Q4. And we want to be, and we confirm that in our guidance for 2017. Second, in 2016, we keep expanding our margin and actually beat the guidance that we gave at the beginning of 2016. Guidance that we had upgraded during the year, and we the top of that guidance. And with the all-time high in terms of cash generation, thanks to great work on our supply chain on extraction of cost, where we have a plan of 1.7 to 1.8 billion of cost saving over 3 years, and we are well in line with that. When we look at 2017, we want to keep growing our business and confirm that back to growth, except one business, the one of infrastructure that we are keeping on repositioning, and we want to keep expand our margin by 20 to 50 basis points. So
I mean, that margin expansion story is what's going to drive. That margin expansion story is what the market really wants to focus in on. And as you say, the infrastructure business. I'm curious to get your sentiment on the infrastructure business. With Trump talking about infrastructure spending, with Europe improving, is that where we're going to see a substantial move higher for you?
Well, there are several elements to that. You were speaking before about oil and gas, which is part of that business, and we see that an oil barrel at $50 is much better, on seeming more stable, is much better than what we had last year. So we see some recovery confidence in that space. Then, of course, as you mentioned, there are plans of infrastructure which are being deployed in the US or which are in preparation in the US, which is good for our business, as well as in the emerging countries, which represent more than 40% of our total business. It's also a lot, this margin expansion, about repositioning our business on the better business of Schneider, especially everything which is the products that we sell to our partners, which in many cases have been growing already in 2016. It's about services that we have grown again in 2016 by 5%. And it's about the development of our connected architectures, connected products, software and analytics, which are already 45% of the business of Schneider, and which have been consistently growing because they are very differentiated inside our portfolio.
You know this is coming, so let's get it out of the way then, because you talk about the software side of the business. Will you come back for a third bite of the cherry, a third attempt at buying AVEVA in the UK, Jean-Pascal?
I didn't get your question. Can you repeat?
Of course. We have seen you try twice to buy AVEVA in the UK. Will you come a third time to buy that business?
Well, of course, I wouldn't talk about that. The merger of AVEVA with our software business was very logical strategically, and I think everybody was quite enthused by the strategic sense of this operation. Then you have to define the right conditions to make it happen, which has not materialized so far.
And if that has not materialized so far, then a prudent CEO would have a contingency plan. Which geography would you look towards if you're going to buy a business similar to that, if not here in the UK?
Look, I mean, we have a portfolio of software which is helping our customers to manage better their operation. Would it be in the building or like the sector that you mentioned in the field of industry, and especially continuous industry or electro-intensive industry like oil and gas. We have grown that business from zero to where it is today, that business of software, to more than 1 billion euro. And it has been growing organically and by acquisition very consistently over the past years. Clearly, it's a very important part of our architecture around the Internet of Things. bringing together connected objects with analytics to bring new functionalities to our customers. So we'll keep developing. We do a lot of that organically by our own coders, our own development, on a bit of that by acquisition, on by alliances.